How you doing today? Thank you for joining us on Benzinga Live.
Thanks a lot, Aaron, for having me. How are you today?
I'm good. Thank you for asking. Where are you joining us from?
So actually, today I'm joining from Tel Aviv, but mainly I'm based in New York, so traveling in between these two.
Wow, I've actually been to Tel Aviv before. Beautiful city, and I know it has a bustling kind of startup and tech culture there that's very unique to the city.
Appreciate you saying so. Definitely a place to visit.
Yeah, well, maybe we'll get to that in a minute. So, you're the CEO of Pagaya. Can you walk us through exactly what the company is, what you guys do, and I know it's kind of some complicated behind the scenes banking stuff. So if you can try to make it in layman's terms, like almost like you're explaining it to a kid.
I will try. I will definitely try. So basically, let's start with the mission. Pagaya is trying to help banks and different lenders to bring more consumers into the mainstream economy by allowing them to get access to credit and to financial products that they deserve. Now, the way we go about it, as you alluded to it a little bit, is a little bit different. Instead of becoming a lender, we actually created a network, an AI network that is connecting to every lender and allowing them with a seamless API to be able to approve more consumers as they come to their website, shops, or what have you. Maybe the best way to describe it is to give an example. So when a person is going to one of our lenders, it can be Klarna, it can be Ally, and is asking for a loan in a dealership, Ally, while deciding maybe not to give the financial product for that person, the loan, will send all the information to us instantaneously in the API, and we more likely than not will be able to approve them and to provide them a loan. Now, the beauty part of that is that the person who's going to get the loan is going to get it from Ally, and the interaction he's going to have throughout his loan life is going to be with Ally. So basically what we have created a ability for that borrower not to get rejected and to get a loan from a very respectful financial institution. And in the same time, we allowed Ally not to give up on a consumer and a customer and make them as theirs. So that's really what we do, just in a very big scale.
So essentially, correct me if I'm wrong, kind of acting as the intermediary between the bank and someone that's looking to take out a loan, but doing so using state of the art technology and AI to make this a very instantaneous process, something that probably used to take a lot longer than what you guys are doing right now.
Correct. We're doing that in less than zero point 0.4 seconds, the approval. And on the other side, as you said, there are institutional clients that are looking to deploy capital into these very unique consumer credit assets, especially in times where banks are shrinking their balance sheet, as what we saw with SVB and few others. So big institutions are stepping in and actually providing that consumer credit, and Pagaya, being a two-sided network, both for the investors and the lenders, are actually facilitating this transaction with an AI as the engine behind.
Got it. So there you go out there. If anyone out there is watching and you're like a person that is looking through loan approval, trying to approve loans and stuff, 0.4 seconds, that's what you got to beat to be able to beat the computer. So I don't know if any humans out there can do that, but you never know. So is it similar to like what an Upstart is doing, or is, what are the differences between Pagaya and Upstart?
So the main differences are the business model. While their business model is to lend to others, they could be considered as a lending partner for us, and therefore they will connect to us and we will help them extend more credit to more people. Now, the similarities, as you said, are the fact that we are in the space of consumer credit, in the space of auto loans, etc. So different both business model, same markets as such, and they definitely could be a partner on our network as we scale up.
So potential partner, not necessarily like main competitor.
Exactly.
Got
well
it.
said.
So walk me through. I mean, I know you guys recently released earnings. Can you walk me through some of the highlights of those earnings and what investors have to look forward to?
Yes. So from my perspective as a CEO, I was very proud of the quarterly earning we have managed to achieve. We exceeded all of our outlook, both on the network volume, which is the way we capture how many loans we provided, we both on the revenues and on the EBITDA. The two-sided network concept that is balanced in between the investors and the lenders is actually helped us to tremendously navigate the macroeconomical turmoil, if you will, and brought us to the ability to continue to overbeat that metric says. As such, that we have raised our EBITDA guidance for the year to a $40-50 million from a $20 million. So a big increase because we have the confidence as we look deeper into the year in our ability to do that. And a lot of that is because different lenders in the US are tightening their credit box and actually sending us more applications and more opportunity for us to tap on to convert that into loans that are going eventually into the institutional clients. Maybe the last sentence I will add on that is our economic and operational leverage is starting to kick in, and that's how you're starting to get to the positive EBITDA and the ability to produce more revenues for the company. We're measuring that by the FRLPC, which is the fee revenue less production cost, that reached into the bandwidth of 3 to 4%, which is how much net revenue Pagaya is creating from every $100 of loan that we are creating, which we feel that this is a healthy number that as we scale and grow, will be able to translate into hundreds of millions of dollars of EBITDA.
Got it. So, can you walk me through this, B2B to C business model? Because I understand that it's kind of a unique business model, and how that might differ from, other players in the space.
Yes. So the main difference is that while we are helping the consumer and our mission is to provide more credit to the consumer, we do not have any interaction with the customer or the consumer. So the B2Cs are actually the lenders. We are becoming behind them as the B2B to them, that is enabling the B2C and facilitating that through institutional clients. So the one leg removed allow us to have a unique vantage point of all the data that we are seeing from so many lenders, while keeping all the lenders equal and not having the B2C relationship as such with the consumers.
Got it. That makes a lot of sense. Basically, just kind of white
White
labeling, taking
labeling, yes.
all that off the bank's plate and saying, hey, you don't have to worry about, this tedious process and doing this. We're better at it anyway. We can do it for you. Um, Gail, I mean, right now, the stock, went up after the earnings report, has come down a little bit from there. Like, what do you think investors on the market are I guess I shouldn't say missing right now because the stock's up more than 100% year to date. But it's still trading a ways off of it of when you guys went public via SPAC. I mean, do you think part of that is kind of being grouped in with these other SPAC companies? Like the whole SPAC group kind of got battered there. Do you feel like Pagaya was kind of unfairly, grouped in with that?
Yeah, so obviously, I like everyone has his own perception of valuation, but I will definitely say that being in the SPAC process was not helpful from that perspective and brought us not to the best place. And the other piece for that is technicalities of like sellers that were on our stock that needed to clear the way in a world of low volumes, as you will alluded that post SPAC. We definitely saw since the last few months that volumes came up and a lot of interaction and interest of investors. We are getting definitely very great feedback of people seeing our work, the consistency, the ability to deliver throughout macro cycles. So I think what you saw around May, etc., is definitely an inflection point that people recognize the gap in the valuation and starting to get into the stock and to see the potential of what that could become years ahead. And we are excited to provide that value to the shareholders, to the investors. We actually initiated a shareholder letter to be able to articulate even better what are we doing this quarterly earning, and we hope that will attract more and more investors to see the beauty and the value that Pagaya is bringing as a two-sided unique AI network.
Yeah, and I mean, so with right now the Federal Reserve, may increase rates again in the United States. It may pause. There's kind of a lot of potential market volatility, not necessarily right now or yet, but if the Fed does hike again, or if the economy starts to slow down and some people are worried about a recession, if the markets do get turbulent again, do you have a plan to try to kind of maintain value in the stock and keep investors happy?
Yeah, so I think again the uniqueness of the ability to have two-sided is that like you have ability to react to macro very well and very rapidly. There is always one side that is a little bit more on demand or oversupply. Now it's definitely lenders looking for more funding, and therefore they are the one that are driving most of the value. And in other days, it could be the investors. So based on where we are going with the economy, Pagaya has many levers to be able to do that. And I think the last 4 quarters of meeting or exceeding the expectations of investors is a very strong, prudent, proven ability to that. And obviously, in the last 6 years or 7 years since the company started, we have managed to experience in the crazy world that all of us are living, anywhere from a COVID to wars and everything. And Pagaya performed and will continue to perform as such. And we'll have a very strong confidence in that capability.
Yeah, I mean, yeah, man, you're fine. Like you've been through the SPAC, the rally after the SPAC, the down, now this 100% rally from the thing. You're like, hey, man, I've been through it. Whatever happens, like we're just gonna keep trucking along. So, the two biggest stories I'd say on Wall Street this year so far, or at least I'll say two of the biggest, maybe not the two biggest, but have been, AI and this whole kind of rally that's been driven by AI. You look at stocks like Nvidia, AMD, et cetera, you name it, basically anything that has to do with AI has rallied this year. I don't need to tell you that. And then the other thing that's been a big storyline has been regional banks. And you're kind of, involved with both. Yeah, so you talked about Ally Bank, potentially, companies like Upstart. But what about these smaller banks and places like maybe credit unions? How is Pagaya working with those? Are there plans to work with those types of institutions more?
So I just want to emphasize that all of it is coming with a lot of work, and many Pagayans across the world that are working day in, day out to deliver that.
Pagayans? Is that what you call
Pagayans,
the
that's how we
employees?
call it. Yeah, that's how we call
I
it.
like that a lot. I like that.
Appreciate
We call Benzinga. We're zingers. I'm a zinger.
So I'm a Pagayan, and
Okay.
as a Pagayan, as you said, we had a lot of periods, but like it's important for us to continue to deliver, and I want to make sure that people appreciate that it comes with a lot of prudent work and understanding where markets are and what is the unique value proposition of our product that we have created both for the lenders and the other side. And part of it is the credit unions. And actually earlier in the year, we partnered with Angelo Gordon, which is a very big asset manager, and helped a credit union to free up some capacity on the balance sheet, giving all the movement in interest rate, etc. And we facilitate that to the institutional clients. And we do expect that to be a repeatable thing. That there are different banks that are having some headwinds that are looking to offload part of the balance sheet, and we are working with institutional clients to be able to facilitate that. And you're right, we have a tailwind from the bank situation, which is one. The second one is people starting to appreciate more and more the power of AI while it has many implementation. And frankly, another one that people are a little bit less familiar with on the institutional world, which is the movement from PE, private equity, into PC, private credit. So while these banks are moving out, actually big asset managers are moving in. So there is a big movement of investment of big asset managers from the PE world into the private credit, which is super interesting for us and where we are standing in the cycle.
Interesting. Yeah. And I mean, with the banks specifically, I mean, like, how, from what you're seeing on the inside, does it feel like the regional bank crisis that people were super worried about that we saw after Silicon Valley Bank and First Republic collapsed? I mean, does it seem like some of those fears are subsiding? Is there as much withdrawal pressure as there was in those, months? I think that was in March, maybe 5 months ago or so now.
So I will divide the answer to two. I think from the a big event of like a collapse of a bank or a super distressed situation, I would say that the odds and the fear has muted a lot. In the same time, as a headwind, I think it's something that is going to stay with us for a while. So higher interest rate, deployment of big amounts of deposits money in a low interest rate environment are going to put some pressure on earning on banks, and therefore will push them to become more prudent, tighter credit boxes, and less ability to provide credit to the consumers. And that's exactly where Pagaya comes in, and that's why we feel very strongly about our ability to onboard more banks down the road, and that our unique tech product that is designed to be very well integrated in the white labeling, as you mentioned, into these type of institutions will bear a lot of upside for both the banks, investors, and our shareholders.
There you have it. Well, Gal, this has been a fantastic discussion. It's been great to have you on and learn more about Pagaya, learn more about the Pagayans too.
The most
And
important.
yeah, the most important. And hope to have you on again, in the future, anytime you guys have updates, and if you or any topics, anything like that. And I also got to mention, we do have we have a Benzinga FinTech Deal Day coming up later in October, I believe, and so maybe we can get you on a panel or something like that, because it sounds like you'd be a good
Would
fit
love it.
for someone to be at that event.
Thanks a lot, Aaron. It was really a pleasure, and appreciate and love the discussion.
Oh, you as well. All right, well, enjoy the rest of your Monday. Thanks again for taking time out of your busy day to join us.
Thanks a lot, Aaron.